Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx. Welcome to another edition of Market Talks with Dr. Stoxx. We're going to do a couple of things today. First, we'll take a very brief look at the general market to see where we're at now here in the latter bit of the fourth quarter. We're just at the beginning of December, last month of the year, and it's been a very interesting market, to say the least. And I want to point out a couple of things that I see as we get into this stage of the market. And then secondly, I want to spend some time talking about one of my trading systems, the 50% per month system, which is described in a trading manual that we sell through our site. More about that in just a little bit. I've had a number of emails from those that are working through the manual, and I wanted to use this brief talk to clarify some of the things there. So let's first take a quick look at the S&P 500 as represented by the SPY Spider ETF. And this is a daily chart for most of the year here. We can scroll out just a little bit, and we can see that we are still in a very decent uptrend. In fact, it's a very consistent, well-formed, well-structured uptrend. I always like to draw a 45-degree angle from lower left corner to upper right corner to give me a sense of the health of the trend. Any time you have a trend that more or less lies in line with that 45-degree angle, you have a healthy trend. If the steepness of the uptrend is greater than 45 degrees, you tend to have something that's not sustainable. And when it's lower than 45 degrees, a flatter uptrend, then you have something that is much more likely to roll over. But a uptrend that hugs that 45-degree line all the way up, like this one does, and it has been doing so for over a year now, is a healthy uptrend and one that doesn't show any real sign here of weakness. The one thing I would like to point out, however, is that you can see that for the most part of the first half of the year, the uptrend, while in a 45-degree angle, stayed above the center line. And then it did this a little bit here where it dipped below, it dipped above, went down below again, and then it couldn't get back up above. So going forward, the last 3 or 4 months here, we're in a phase of relative weakness in this uptrend. And that's confirmed when we look at the MACD, and we can see that the MACD has been putting in lower highs off this big uptrend here, this big thrust upward. Lower highs, which means that the momentum at each of the up thrusts of this uptrend the momentum is not quite as strong as it had been prior to it. And that just means momentum is waning a bit. It doesn't mean we're rolling over into a bear market. Doesn't mean we're going to pull way back down, drop 20% overnight. Nothing like that. It just means that going forward, we are in an uptrend that is not as strong as it had been, and an uptrend that is vulnerable now to pretty significant pullbacks. If we draw a trend line under the pivot lows, which we would do so right about here, we can see that that's your support line, and I wouldn't be too surprised to see a move down near that level at some point in the next 6 to 8 weeks. But in the absence of that, let's enjoy the ride for as long as it lasts. One of the things I also wanted to point out on this trend is that you can see that whenever the trend stays relatively close to that center line, you don't get much in the way of pullback. Whenever you get sharp divergences from that angle, as you see here and here and here, etc., you are much more likely to see pullbacks from those. So shallow pullbacks when you're near 45-degree angle, much sharper pullbacks when you get away from that 45-degree angle. So just a thought going forward. We are more or less back in line with the 45-degree angle here, so I'm not too worried about that. Now I want to shift gears a bit to talk about a trading manual that I have on our website. Well, let's take a quick look at that. You can purchase it by clicking on the Learn to Trade tab and then going down to Stock Trading Manuals. And it's this one here, How to Make 50% per Month Trading Stocks. That has been a real bestseller for us, and I'm starting to get emails now from people who are working through that manual and asking me some questions. So I thought I might use this time profitably to demonstrate what the setup in that manual looks like. It's one of the most powerful setups. The only difficulty with it is that it does take some patience, in that it does require you to hold on to stocks maybe a little longer than you might be accustomed to if you're a short-term trader. Let me give you two examples. One that popped very nicely yesterday. We've been in it for a little while, and it's the stock ETRM. And the gist of the 50% month setup is that you're looking for stocks. This is, a weekly chart. Let's get to the daily chart. You're looking for stocks that have made a sharp fall, sharp downtrend, losing maybe 50% or more of their value in that downtrend, and then have pulled into a sideways basing period that may extend out for several months, even a year or longer. And then within that basing period, we're looking for signs that the stock is ready to break out. And usually when it breaks out, it does so with very strong momentum, as we see here with ETRM. The stock did tumble very sharply, so that's our first point of contact with this chart. It went from, $4.50 all the way down below $1 per share. That's a huge loss. From that point, however, it hit equilibrium, and we see that we have a basing period that lasts here for several months. We draw our channel lines there, and what you're looking for within the base is a higher low and then a higher high in combination. We have our lows set down here in March, April, and May. Then we get a new high within that basing period. From that point on, we want to look for a higher low, which we get right about here, mid-July. It tries to drive up again. We get a high, but it's not a higher high, so we still don't have an entry point yet. We come back down here. We match that low, which still keeps us in the position of waiting for this to really take off. We get a nice little thrust up, nice little pullback here with a higher low. That's a good sign. And then we're looking for a high that will close above this channel line right here, and we get that on this particular day, which it looks like the 10th of October. That was our buy signal, and it closed that day at $1.47, and it traded all the way up to $2.24 yesterday, which is more than a 50% gain. In fact, it gained 63% yesterday up off this bottom down here. I'm not sure what it would have been off of our entry. We actually bought it down in this little pivot here, but nonetheless, that's what a decent setup looks like, and I'm expecting ETRM to continue its move higher as it fills this gap. It probably will test the $3 level within the next few weeks or months. The other stock I wanted to show you is one that we are currently in, having experienced the breakout already, and it's still making new highs, so this has been a beauty of a trade for us. This is ZGNX, and we can see here the significant sell-off from about 340 down to 120 or so, significant sell-off down to a bottom. It hit a point of equilibrium where it put in a nice little sideways channel that would look something like so. And what we're looking for here is we're getting a series of higher lows, barely, but nothing to get too excited about just yet. We want to see those in combination with a higher high. We have a higher intraday high, but I'm not worried about that. I'm looking at closing highs. We don't get one here just yet, so we have to wait a little bit. And we actually got into the trade down here in this little pivot area where it was on strong volume, showing some nice thrust. And it's on this particular day here that you get a closing high above this previous pivot high. That's your entry signal. And from there, it rallied all the way up above 340. That's around $1.85 or so, all the way up to 340. And it looks like it's about to test that high again for another potential breakout. So that's the 50% month strategy. You look for stocks, again, that have significantly sold off, have pulled into a sideways trading channel over a period of several weeks, months, maybe even a year or more. And then you're looking within that channel for a higher low and a higher closing high. And once you see that, jump on it and wait. Waiting is the operative term there. So if you want to know more about that, you can go to our website and purchase the 50% manual. I also want to point out that I do occasionally post some stock observations on my Seeking Alpha site. This is not my site, but I'm a contributor just now to Seeking Alpha, and I'll post some blog posts and so on. And if you click on follow here, this link will put you on a mailing list for anytime I post a new article. We did alert folks to ZGNX early on, and we've been following that ever since. And on our website, you can also go to our blog and sign in on our blog, register, put your email address right down here, and you'll get an email alert anytime I update the blog. And you can see that we've been talking about stocks that match some of those 50% setups here. ETRM was posted yesterday. Unis is one that recently broke out of that setup, and that is doing very well, and some others. So just wanted to let you know those are resources for you. We hope to see you on the blog, hope to see you in a coaching service or through one of our webinars. But in any case, enjoy your trading, bless you, and thanks for listening. Bye now.